Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining the Real Estate Risk Report. I'm your host, as always, Lance Pederson. So today I have with me Seth Teagle with the Stream Group, and he is based in Ohio, and he is a multifamily syndicator. He also happens to be from the same hometown I'm from, back in Minot, North Dakota. So I saw that he was on a podcast of a colleague of ours, Chris Salerno with QC Capital, and that he was from Minot, and there's not many of us from Minot. So happy to have you on, Seth. It's great to meet you. I know we graduated a few years apart, but basically grew up in the same hometown. So it's always good to have the Dakota boys. In fact, for those of you watching on video, he has a beautiful picture of the homeland there behind him. So, we may leave the Dakotas, but, we never forget. It's a great place to grow up and raise
still have family there. So,
yeah, very, very good. So why don't you share with us a little bit about how you ended up getting into real estate? Like what led you to real estate? What led you to Ohio? Sort of how did you go from back in Minot to forming the Stream Group in Ohio?
Yeah. So the short story is I graduated in Minot, was tired of the cold and the crazy winters. So I left and moved to Florida, and I was in Florida for about 7 years, Pensacola, Destin area. While I was down there, I actually got into the fire service and became a fireman down there. Met my wife. Her dad flew for NetJets, which is based out of Columbus, and that's where he lives. So we had traveled a couple times back and forth. Lived through, probably between 2004 and 2007. I think we lived through like 6 major hurricanes, and I worked. At the time, I was not in real estate. I was working through those. We went over to New Orleans when Katrina hit. We went to Biloxi during that time. We had Hurricane Ivan, Dennis, some other larger ones that were direct impacts into Pensacola and those areas. And so just saw a lot of the craziness that comes along with hurricanes and whatnot. And just was kind of like demotivated to live there, right? I mean, it was something that could happen every year. And I was just like, this is kind of crazy. I don't have any roots here. I liked it down there. The beach was great, but it wasn't great enough for me to want to stay and continue to have to deal with that. So at the time she was ready to move, we came up to Columbus and visited, and actually reminded me very much of North Dakota. When we got out into the country, out of the metro area, and they just had a lot of great things here. OSU football. They have the Columbus Blue Jackets. They have a pro soccer team. They have the Clippers. They're the minor league team for the Cleveland Indians. So just a lot of different things. So we moved here in 2008, and I stayed in the fire service. I'm actually been in the fire service now 21 years. So that's been my main, up until I got into real estate about 6 or 7 years ago. That was like my main career. And I like it. It's still something that I'm doing. We have 24-hour on, 48-hour on, off shifts. So about 20 days a month to 23 days a month, I'm full-time real estate. And then the other few days a month, I'm at the firehouse. But, like with anything, there's time, we're there 24 hours. So I have a lot of time to work on, work on real estate. I mean, I take calls. I do a lot of I use that time, our downtime there to do a lot of the paperwork, a lot of the emails, stuff like that. So I have a partner in the Stream Group. He's also a fireman, and he's on a different shift than I am. So one of us is always off, which is really nice. Like I said, it's not like your normal W-2 job where you're 40 hours a week, Monday through Friday. I mean, I might work a Monday, and he works a Tuesday, but one of us is always off to manage the properties, to work with the management team that we have in place. So about, I'd say probably 6 years ago or so, I got into real estate. I was really kind of I was looking for something different. I was looking for, a way to build wealth, to just kind of get into something different. I was kind of getting bored with the fire service, and a friend of mine that I knew in Florida he had started off as a realtor, got into flipping single family, got into wholesaling, hard money lending, and he was leading a group down there in Pensacola called the PIG Group, and he still runs it. It's like anybody that's in real estate in Pensacola or that Northwest Florida area is involved with it or knows Matt Robinson. So I called Matt and I said, hey, you've been in real estate for a long time. What is that? How do you get into that? What does it look like? And so he sent me a bunch of material. And that was kind of like the first thing I started learning on and just devouring. I really got attached to the idea of what it can do for you and just how great it is. And it was right up my alley. I have a really strong construction background. I'm an officer on our department. So, I'm used to running teams, creating, working in high stress environments and figuring out what the problems are and bringing a successful outcome to the situation. And so real estate, it was just like it involves so many of those things. So as I kind of started learning and really devouring information and kind of deciding like what's my niche, I met another guy here locally that was a house flipper, and he had been doing that for quite a while. He actually left his W-2 job and was full time in real estate, and so I started working with him. Was doing his project management and then also managing his portfolio of about 25 units. So I kind of realized quickly that I didn't want to flip houses because it was a lot of work and it was a lot of risk. Totally. And there were some houses that he did that he broke even on. There were some that he lost on.
Yep.
There were some that he did great on, right? But it kind of all equalized, and just the amount of time. He would get up at sun up and he would work until sundown. And he just burned through contractors. He would. People would pick up material, so he's running in his own truck to get the material, and it was just super stressful. He's working out of his vehicle all the time, and I really kind of saw, and not that there aren't people that dial in their systems flipping houses, very successful, but at the early phase, I'm like, man, that's just not what I want to do. With still having a career at that time, I was thinking, I'll still be a fireman till I retire, and do this on the side. Well, I was seeing that managing. I realized quickly too that owning single family homes all over the city was super time consuming, driving from one place to another, having the material, everything was unique and different to that one property. And so you could never really systematize or scale with that model. At least, like I said, at the time I couldn't. Now I've got people I know in Columbus that are doing 7 figures a quarter.
Yep.
That's a different animal, right? But it takes a huge team to do that. And so I really bought into multifamily. I always kind of thought I would start smaller. But I had a family friend of mine that was an investor that he had a small portfolio of stuff, but he's an older guy. He had a lot of equity. And so I kind of went to him and I said, hey, look, I got X amount of dollars. You've got some equity. Why don't we kind of, you were kind of like be my first investor, but let me go take down the biggest thing I can find. And so he was like, yeah, let's do it. So he was kind of like my first passive investor, but we ended up, we bought a 50 unit. So I owned the majority of that, and I gave him some equity. It was less than 20% though, because then he would have had to been on the loan. There you go. Ran everything. We did it. I mean, like I said, it was one of the worst. I didn't know at the time when we bought it, but it was one of the top 3 worst apartment complexes in the neighboring county to Columbus. And I didn't realize until I called some of the police officers that I'm friends with in that area. I'm like, hey, what do you guys think of this? Because that's kind of how we start. Like when we're looking at buying a property, I'll get in touch with either like the local police or fire, because those guys aren't going to tell, the broker will always say, oh, it's another area. The city's dumping all this money and it's going to be great. And I'll call those guys and they'll really give me the real story of what they're there for. Kind of give me the culture of that asset, And so I did that, and I realized quickly that, man, this thing is, this is going to be like, it's like going to be crazy, but the upside could be really good. And so for the last 15 years, nobody had really cared about that property. And so we went in heavy with management, heavy with, a presence on the grounds, and we started renovating immediately. We went through 42 units in a year, renovating with all the common areas. The tenant base completely turned over, basically, because like I said, we took over, and I think like day 3, we had 12 people leave in the middle of the night. Plus, they already had, I think when we took over, they already had 10 vacant units. So it got, like I said, it was a lot, that first deal to take in. But, I had a
baptism by fire, baby.
Yeah. So I had a couple of friends that I could call that were already syndicating, already having some big deals that they were working on. I called them and kind of talked through some strategy. But like I said, I mean, it really it required me to be on site, managing contractors, making sure the business plan was working. We ended up doing our refi in 13 months, and we pulled out $1 million in equity on that deal alone. And so it was, and really, like I said, that's all she wrote after that. I mean, it was like we just took that money and paid back the gentleman that put in with me. We bought another 40 unit. We renovated that, went full cycle with that. We bought another one that was 60 units. And then at that time, I had, because Columbus, Ohio is like a really hot market. It's a very strong market. And so we have a lot of out-of-state investors that come into Columbus, but the one thing that they usually lack is local people, local knowledge. I have a hard time turning a property over to a property management company because I've seen them either lie to me or lie to other people. It's really hard to kind of keep your pulse on the place with. I mean, I use third party in one of my buildings. And some of them are great, but it's a different relationship than, I turn the property over to them and now I work for them basically, or they're in 100% control. I don't partner with guys like that. I always make sure that we have aligned interests, but so that whole experience helped me. And like I said, since then we've just kind of blown up. I mean, we've done a couple of big deals now. The largest was 180 units. We just closed a couple of weeks ago. And we're growing. I mean, we're looking to break 600 doors by the end of the summer. And then, like I said, we're just going from there, and a lot of cool things happening. But that's kind of the story how I kind of got into the stream group and how things kind of started.
Yeah, I love the fact that you're able to sort of observe the crazy lives of the others, because usually the trajectory is, hey, they go buy a bunch of single families and they kind of learn the hard way.
Yeah.
So the observation of, wow, that seems like a lot of work. And then, of course, just the built-in constraint of, having the full-time, the job, of which, of course, like you said, the beauty of being a firefighter is, you do have some downtime, but how to make that balance sort of just forces you to say, well, my time is valuable. I need to be efficient. Yeah. Right. And of course, that's the beauty of multifamily. So and I agree with the whole out of town person and the third party property management stuff. Like you said, like a lot of these things you can work. And I think that's why it's always interesting to hear how people do it. It's not that certain things don't work. It's just that it's realizing what sort of fits the personalities of and the people that are doing it. Right. And obviously managing the assets yourself and the degree that you can pull that off. I mean, no one's going to care more about the asset than you as the owner of the asset. Right. And so, and two, it sounds to me like your strategy then is sort of really the Columbus metro area. Like that's where you.
So we've really kind of stuck close to like Central Ohio. So I don't necessarily do like the city of Columbus. I do some stuff. I mean, but Franklin County is just a tough county. It's not a landlord friendly county. There's a lot of money coming from out of state, overseas right now because the market's so hot, and it's just kind of like it's just one of those markets like Dallas or Charlotte or, some of these areas in North Carolina that are just blowing up. I mean, it's hard to compete with somebody from Israel who has, or who's getting negative interest on their money over there. So they'll come over here and they'll pay like a 3 cap or a 4 cap or a 2 cap, like you've seen, they'll way overpay, but with their modeling and with what they're trying to do, it makes sense for them. Right. Where for me, I'm like, I can't pay that. I'm not going to pay that per price per door in that area because I know that area. We just bought a 70 unit from a group they're from California. The broker again told them it was an up and coming area. They got in. This is like I said, a great example. They had never bought multifamily. Thought, hey, we can do it. We'll go to a great market. It'll work out great. What could go wrong? And so they bought it. And they linked up with a management company who, unbeknownst to them, had never handled a C-class property. So they were a strong management company in Columbus, but they were used to doing A-class and some B-plus. And this is probably a C-plus class building asset in the area of town. It's a more challenging tenant base. So they didn't know. On paper, these guys look great, and they signed up for a year with these guys. And these guys the management company just completely dropped the ball. And basically drove the deal into the ground. And these guys would come out like once a quarter. And what they would find is that the management company had been misleading them or exaggerating timelines, exaggerating things. And they could just never get a handle on it. So they finally had forced them to sell. And so we were able to get it at a great price. And again, even the area I don't necessarily like because I live here. So I probably have some biases to that area because I know it. But the price per door was so great that I'm like, look, we could take this, we could do the renovations that were supposed to have been done. We can get out the bad tenants. We can get in the good tenants, because there's great people in that area. And then we can just turn around and sell it again. And we'll make, the upside that they thought they were going to get, we'll get it now. Because we're local. Like I said, we just know. Like the management company that they used, the first time I met anybody from that company, I said, it was clear to me they were terrible. But on paper and on the phone, they sounded great to these guys. And so.
Yeah, I think, and it's a good point. I mean, is that to do property management for Class A stuff is, I mean, those are all those tenants are on their best behavior, right? I mean, like they have the money. They're like, it's a different animal. You go in.
They I wouldn't say they care, but some of the properties when you get to C class, I mean, you have professional tenants. I mean, they know exactly what to say, what to do, how to work the system. And not everyone. And like I said, we have a pretty high standard for like who we rent to, but it can just be a challenge. And so, if you're a manager that's managing 1,000 A class units, and all of a sudden you want to do C class, you don't realize the amount of time it takes to, cut your teeth or learn how to do that. And so that's part of what I would say if we're going to use third party. There's a huge interview process that I go through with these companies that I guess because I've been like my own boots on the ground, I've been there. I know what to ask. I know, again, making sure that we have aligned interests. Because that's it. The management companies are out to make money. They make money through first month's rent, through maintenance fees. That a lot of them will tack on 10% on any maintenance call. If they're supplying builder supplies, if you're doing a renovation and you're letting them do it, there's a fee for managing that. There's a fee for, like I said, if they go to Lowe's and they get great discount on flooring, you're not going to see that. Yeah. They're going to still charge you what retail would have been, but they're going to pocket that. And so, like I said, there's a lot of questions I ask, a lot of things that I want to talk to them about. And then really comes down to, like I said, the aligned interest. It doesn't benefit me in any investor that's with us if like late fees, for instance, that goes straight to our NOI. If we have routine tenants and in that tenant class, you have people that pay late all the time. I mean, I've got people that pay on the 10th of the month, every month, forever, and they always will, and they always pay a late fee and they don't care. But if you have 15 or 20 of those people over, a 70 unit property, that's a lot of money that goes right straight to your NOI, doesn't cost you anything. So like fees like that, I look at if some management companies, they take those fees. So It doesn't, they'll do the rent collection for you, but anything on top of that all goes to them. And again, they're a for-profit business. So it makes sense on their side. But as an operator, I have to look at those things because the way that we create value in the property is increasing the NOI. And that's what I tell other people I talk with. If you're going to passively invest with an operator, you really want to make sure they know how to operate and not just, there's a lot of people out there nowadays that are flying around buying doors, 150 here, 200 there, whatever. And then they just turn it over to a third party manager and they really don't know other than what the manager tells them, like what to do. Or let's say the deal goes south and the manager's running into the ground. Like how do you straighten this out and still make it profitable for everybody without just doing a capital call or, realizing that, selling it can't just be the only option. Because especially if you get Fannie or Freddie loan and you have a huge yield maintenance you got to pay to get out of that loan. I mean, it's
painful.
What are you going to do? And so, that's kind of, like I said, with the management side, I wasn't happy with, the managers that I was running into not all big players are bad, but there are some in our area where they have 300 to 500, 600 units. You're just a number to them. They get your account, you know what I mean? And then it's the same thing. Like you just run into the same problems that I've discussed. So, like I said, we really said, well, let's hire our own management company. Like I said, I'm not the guy calling the tenants. I don't do the leasing.
Yeah. No, you build a team to execute. Yeah. You build a team to operate.
People that do it. And then we control all those things. And so I would dare say that our assets are the most high performing, efficient, making the most amount of money. Like I said, the original 50 unit I bought, within 1 year, our NOI was $100,000 more than the sellers.
Yeah.
So,
and that's how you create value. And that's what makes it value add. And I think that's the distinction, right? Is that understanding that, people who are buying the Class A properties with sparkling pools and, everything's there. I mean, it's a heck of a lot easier to be an out of state buyer of that asset and to find a management company who can just sort of, not screw it up
Yeah.
And collect the rent. Now, if you're going and you're looking at a deal that's a value add play where you're attempting intentionally to drive and increase NOI, which is what, of course, increases the value of the asset. And it has some work. I mean, it's a repositioning of the asset. It does become very challenging and difficult to rely on a third party property manager for all the reasons that you've laid out to help and assist in the execution of that strategy without ensuring that there is true alignment of interests and in a multitude of ways, right? But that's tough, and I think that's where when you do go into situations like this, where you're finding assets that are underpriced because they've been mismanaged, or deferred maintenance or whatever the case may be, that as a passive investor, when you look at these situations, anyone can make a spreadsheet look like, it's going to move up and to the right and just all these amazing things you're going to have. You're going to bump rents $300, et cetera, et cetera. But it really does come down to you have to look at, well, what is the business plan? Like they have to, like, a deal sponsor has to be able to articulate what their business plan is. Like, we're going to buy it and this is what we're going to do. If they're like, we're going to buy it just because we think it's a great price, that's not good enough, right? It's like they got to be able to articulate the strategy. And then when you listen close enough, and it's things like you said, where you're going, man, we're going in there and there's 10 vacancies and, if people aren't paying, whatever, like that's called, like, there's hair on the deal. Like, that's how you're going to create value. And if that person's going to somehow do that from 6 states away through some other property manager, you need to ask a lot of questions. And I think that's what it comes down to. Real estate's a local business. And I'm with you, is that I think, and I tell a lot of my clients when I'm consulting with them on this, is just to say, I know sometimes it feels weird to like constrain yourself to a certain geography, right? Like, but you don't realize from the outside, was you say, yeah, we're doing deals and buying stuff in New Jersey, but we're also expanding to Florida. I know that might sound like you got a bigger operation. I don't know what you think, but to me, it sounds like you don't have focus, right? Like you don't, and that comes with, not to mention to your point. I mean, like, there could be a deal on one corner. I mean, we all know this is location. So a property that's on one corner versus one that's like literally a half block on the other side, it can make a huge difference. And having local knowledge before, during the underwriting, and not to mention then post, when you're trying to execute the business plan, it just seems to me, obviously, this is the real estate risk report. We're talking about how do you mitigate risk? These are risk mitigants.
Yeah.
Find people who are good at finding deals, who are in the location that they're in, who know what they're going after, and can, and then have the right, if they have no construction background and they're going to be doing deep value add and putting $15,000 a door, in, like, well, who's going to make sure that stuff is executed, right? Yeah. Because if no one's ever lifted a hammer in the group, or even going into a rough, apartment community or something where there's, like, even having communication skills, right, to be able to, like, navigate that and not have like complete revolt and have like literally everybody vacate.
Yeah.
Because occupancy is the killer. I mean, even when you're trying to execute a value add strategy, I mean, you want as many people paying your rents as you can while you are, improving those units, right?
Yeah. Yeah, for sure. And to your point as well, I think it's important, there are guys and there's operators that are buying in multiple different markets and they're flying all over the country and they're doing, and there's nothing wrong with that. But where I have found to be super successful, and it probably goes back to like why I got into this, is more family time and long-term wealth and whatnot. And I just, it right now it suits what I'm doing. But being local and buying local, one, I can help. Like, I've partnered with some guys from Salt Lake City that, they had the capital, but they didn't have didn't have any local knowledge, didn't have anybody locally here that could run stuff. Mm-hmm. We partnered together and we took down a bunch of units. And being local, like I said, it's like right now we're building our infrastructure on the material side because, I've been working with Lowe's, but we're at a door count now. It's big enough. I have a friend of mine in Cleveland who's got 850 units up there. He's also using Lowe's. I've got a friend that's got a couple hundred in between us in Mansfield, Ohio. And what we're doing is we've gotten to the point where we're no longer like going to the pro desk, but we're actually meeting with the regional director who manages all of the Lowe's in the state of Ohio and part of Pennsylvania. And we're working out strategies on, one, our pricing is 70% below retail because there's just, we're like, look, let's all buy the same sink. Let's all buy the same tub. Let's all buy the same toilet, vanities, pieces and parts that we need. And if we're buying them together as one big conglomerate,
Yep.
our pricing it's gone crazy low. And then they're able to ship stuff directly from these huge warehouses that they have. So like, I'm not going into Lowe's anymore and buying flooring or drywall. I send an email to my contact and say, hey, look, I need 500 sheets of drywall delivered to this address by such and such date, and it's there. So now my guys, the contractor, the general contractor that we partner with, he doesn't have to send his guys to Lowe's. He doesn't have to, there's obviously there's day-to-day maintenance stuff that they may have to go through. But like we're putting together a big project, we're not losing time, money, and the guys aren't leaving the job site because they have to go get mud and tape and whatever at Lowe's anymore. We have everything there, and which has led us into other things too. We're like, where are we going to put all this stuff? So we started looking at warehouses and strategically buying things to where we own it and rent it to ourselves. So it becomes another profit center where we put another deal together. We buy the warehouse, then my LLC rents the warehouse, and so it's crazy. But like I said, if you're doing it in multiple different states and multiple different areas, it's very hard to do that unless you're partnering with somebody that's a rock star in that area, right? So like if anybody that's listening wants to come to Columbus, Ohio, call me. You know what I mean? Like that's the only way I feel like you can be super successful is if you have rock star operators in these different cities and you have a good relationship with them and you've kind of vetted each other and everybody's good with it. Well, then, it can work. But I just don't know. A lot of the guys I know, they don't, they're not buying in their local area operating that way. And so, it's just kind of hard to do. But
yeah, and that's why I just think the power is in the, and I know it becomes, and it's becoming a bit hackneyed, just the notion of the vertical integration, but it really, you can't discount it. Everything you just said is that it's a business, right? Like acquiring undervalued multifamily assets and repositioning them and everything that goes into it is its own business. That's what I mean. It's different than acquiring 400, 500, 600, 700 unit Class A properties that are stabilized, core assets. That's different. They're two completely different things.
Yeah.
And success criteria for being good at those two different strategies are entirely different, right? And that's why I go back to, as passive investors, it's important, just like it's a business. It's just like I look at any business. I want to say, who are the people? Just like Warren Buffett does. Well, he owns See's Candy and he owns that furniture company, whatever. What does he say? Why does he buy those companies? Because of the management team, the people running those businesses. That's what he starts with. It's like, you pick the jockey, right? You pick the jockey, not the horse. Yeah. Who knows how to make it happen? You start there, right? And then it begins and ends there. But ultimately, as an investor, it is important that you understand what they're saying, right? Like if it doesn't make sense to you, then it may not make sense. It might mean that's not a good deal. If you can't see yourself, if Seth comes to you and says that he's going to buy this thing and there's rents at $600 and he's going to raise them to $1,400 and this you pull it up on Google Maps and Google Street and you're cruising around this area of town and you see dudes with, Glocks and, and whatever, and you're going, how in the hell are you going to do that, Seth? It looks to me like that's never going to happen. I mean, or looking on apartments.com. I mean, the point is that, because what I hear a lot of, Seth, and it drives me crazy, is that everyone's like, investors are dumb. I mean, that's basically what they're saying. Well, passive investors know what the hell they're talking about. So we don't give them anything and they're basically idiots. And I'm going, okay, well, yeah, maybe some people, they don't have the right process for making decisions, but I don't believe it, right? And so for any operator or sponsor to think that what they're doing is sort of too difficult to understand, especially in the real estate game, I get it. You're executing some long, short hedge strategy or something. Like, I don't even know what the hell that means, right? Like some of that stuff, but this is real estate, right? Like, don't tell me that because you're buying industrial buildings that your average, high net worth accredited investor who's doing brain surgery one day or, doing root canals or whatever can't freaking understand how you do leases with people. And come on, get over yourself.
Well, and you're exactly
it's not that damn complicated.
Yeah. I mean, the people that are at least that I work with that as investors, I mean, they got to where they're at because they're smart individuals, and they're not, that's part of it. Is sometimes I feel like guys want to they want to cloud the water because they don't really know how to explain it to you. They
Yeah.
don't really know, like, if you have specific hard questions, they may not know the answers, and so they don't want to actually they don't want to give you an opportunity to ask those harder questions. Where I think we try to, like I had a call today for about an hour with a guy that's going in on one of our deals. He's never looked at a PPM before. I mean, I walked him basically through the PPM, and he's like, and talked to him about all those different things. But it's exactly it. I mean, he's a physician, very smart individual. I mean, very amazing in his field. It's just, like I said, it would be like me going and talking to him, like you said, like brain surgery. I wouldn't have the clue, but I mean, but some of the nuts and bolts I can understand, and some of the things like, this goes here and that goes there. Okay, I can kind of understand that, right? I mean, I'm not going to get down to the nerve ending names and whatnot. I won't get that granular, and nor does he want me to when I'm talking about a PPM. But hey, here's the things you need to look at, right? This is here for your benefit. These are the big nuts and bolts, pieces and parts that are important. And we always encourage people, take it to your attorney. Like if you are, if you have questions, like please ask, or we'll get you in touch with our attorney that puts them together, so that things can be explained more. Because the last thing that I ever want to do is for somebody to feel like they're putting in money, but they don't really understand, because I'm looking for long-term relationships. I don't want somebody to invest on one deal and then I never hear from them again. It's to me, it's, my goal is to keep buying and doing what I'm doing until I can buy that Class A asset, that 500 unit, super nice, just built asset that there isn't a whole lot of work, but at that point now we're buying something like that. And it's just, we're putting money in there and it's just time, we've grown the wealth to what we want it to be. And then, like I said, we go out and buy there's a 687 unit portfolio that just went on the market here in Columbus. I'd love to buy two of the buildings I'm super familiar with. There's 3 different properties, 280 units apiece. It's what did he say? The asking price is like 80 million. I'd love to be able to take something like that down. Could I run something like that? Absolutely. But I don't have the investor base to take something like that down. And my personal wealth that we have through what I've been doing is, I can't write a check for the amount of equity that will need.
Yeah.
But that's the goal is, I think you're always kind of climbing, and you're always trying to get into, I like the B assets, when we find them, we like to buy them, like you said, you have to kind of, if you're doing a value add strategy, you have to find, maybe the rents are topped out, but the management's terrible, and you just tweak the management, and now you have added value that way. It doesn't always have to be tearing down walls and really renovating the property. I know some friends that bought a 580 unit in Texas that was a huge deal for them, but they looked at it and it had been passed over by a ton of people, but they were like, they looked at it and saw the square footage of these 2 bedrooms and realized that they could make them 3 bedrooms just because of the size of the units. So that's what they're going to do. And now they've created a whole new profit center within that complex by just adding some walls, right? But it got looked at by like 30 people and nobody else saw that.
That's right.
So
that's what's cool about it. I mean, you can, a little creativity in this business. It does go a long way. It's a great business. To your point, it's a get rich slow sort of thing, right? Like this isn't, you don't just make things happen overnight. It's something you got to commit yourself to. And, I think that's what's good about it is that obviously I've seen a handful of guys who've like found shortcuts and, they usually implode epically, at some point. Right. And so it's just, it's one of those things, just steady wins the race. It's the long game. And that's why I think it's just looking for, when you're a passive investor, it's looking for people, guys like Seth who are saying things like that. Everyone has a different way of kind of saying it, but if you don't hear them intimating stuff like that, to me, those are red flags, right? It's like you want to hear that there's this commitment, there's this conviction, there's this, here's why I'm doing it. This is what I'm driven. There has to be more to it than that. And the capability and those things, that's what you're looking for. Then dig in, make sure the business plan makes sense. If it doesn't make sense to you, those are the things you just need to step away from. Like, it just seems nonsensical. Why would anyone do that? There's a really good chance that no one would. Right. So yeah, it was good stuff. So where can people learn more about you and reach out and contact you?
So I'm on Facebook, obviously just Seth Teagle. You can look me up on there. I can give you my cell phone number to put in the show notes, or add to it is fine. And then you can our website at the recording of this is under construction because we're adding some more pictures of properties that we have under management. But it's www.thestreamgroups with an S, so plural, streamgroups.com. And there'll be you can go in there and kind of like look and see what we have right now, what we're doing. There's an area that you can look at like the management side of things, and kind of check that out. And then my email through that is seth@thestreamgroups.com. So you can email me as well.
Awesome. Cool. All right, Seth, it's great catching up. Nice meeting a fellow Minotian, North Dakotan. It's always good to connect. So take care, my friend.
Yep. Have a great one. Thanks for having me on.
Yep.